Welcome back to America's Commercial Real Estate Show. I'm Michael Bull. The segment's brought to you by buyproxy.com. Have you seen this website? It's BIPROXI.com. It's a complimentary listing service where brokers can list properties and buyers and tenants can go check out properties. They also have a suite of marketing products. Check them out. Well, today we're talking about hospitality. We're talking about the hotel industry, one of my favorite sectors. And we have Mark Woodworth here, and one of my favorite guests here in Studio One. And he's managing director with CBRE Hotels America Research.
That's it.
Right? And so, Mark, it seems like we've had good times and we've had a nice long cycle. You've just told us that hospitality world, hotel world is looking pretty good. Things are moving along pretty well. What could be the downturn? What could be the headwind that if we're in the hotel industry, we might want to watch out for?
Well, our research has revealed, Michael, that there's historically 5 things that have occurred that either on their own or maybe 1 or 2 happen together that bring an end to the lodging cycle. Overbuilding is one. We talked about that briefly before. We just don't see at the macro level any threats. There's maybe a handful of markets around the country where there should be some concern for the next year or 2, but not a big deal. Things like an asset price bubble. So most recently, the housing crisis we saw 10 years ago, I guess now, and prior to that, the dot-com of the 90s. You know, I would ask you, is there a bubble today in the marketplace?
I don't think so.
It's kind of hard to find one, right? Usually, in all the academic literature says you know you're in a bubble when it bursts, and you can look back at it and try to figure out what actually happened and so forth. But it doesn't seem to be really any concerns, again, at the macro level of it being a price bubble. There's always the catastrophic event that you can't predict.
Right.
So that risk is always there, but that's not new. We talked about the economy briefly. You know, and our house view, again, is it looks very good for the next certainly 18 months. We're seeing some slowdown after that, but in terms of implications for lodging, as I said, it's not really it's a downturn. It's a slowdown. And the last was oil energy prices. And so, you know, early in our careers, there were questions about, are we going to run out of oil? Now the question is, are we going to run out of demand for oil? Right. So because the price seems to be so low, so there's clearly no threats on that front. So that's why we say when we kind of roll all that up and what do we think that holds for the future? For those things that you can predict comfortably, you can anticipate happening, and some of the advanced data that we've seen for this year and early into next year makes us feel very, very good that, again, there's a lot of tensile strength, or the fundamentals are very, very sound to continue this kind of very durable, profitable outlook for the hotel space.
For 10 years or for 2 years?
Well, at least 18 months anyway. 18 months and maybe 2 years.
18 months, okay.
Yeah.
So what do you see for cap rates at least around the U.S. for hotels trending in 18, and what do you expect moving forward into 19?
Yeah, they've generally been flat, Michael, in the hotel space. Again, at the macro level, you have market level variances and so forth. Certainly the pressure has been upward, given what's been happening on interest rates and so forth. But again, from our cap rate forecasting models, we just don't see a whole lot of movement going forward. So again, when we think about from an investment perspective, we think the profits are very attractive today. They're not likely to grow much, but they're going to be there. They're going to continue to be there. If cap rates do change materially, maybe they go up a little bit. So that kind of eats into the idea that my investment is likely to appreciate much, at least over the next 2 or 3 years. But we just don't see within the hotel space alone a lot of movement there. Comparing the fundamentals of the other real property types to lodging, on a relative basis, we think the outlook for hotels over the next 3 to 5 years and value appreciation is among the best. Certainly relative to multifamily, industrial, retail.
That's great. Now, in your 5 areas where you kind of want to watch for issues in the hotel industry, one of them that you didn't mention in the top 5 at least was the shared economy, kind of the Airbnb, that everybody renting out their places. Does that have any impact on this industry? Is it changing?
In answering your question, am I allowed to ask you a question?
Okay.
Okay. So, record high occupancy levels in traditional hotels, as we've come to think of them. Okay. And so 2018 was better than 2017, 2017 was better than 2016, et cetera, et cetera. So if occupancies continue to set records, who cares about the sharing economy? The Airbnbs, the VRBOs, the HomeAways. I mean, I could reach a logical conclusion when I think about that.
Yeah.
However, what we do think, well, two things from that. There's more people traveling away from home from ever, so that's who's occupying this non-traditional space. Earlier, we briefly talked about this issue of weaker pricing power in traditional hotels. Well, clearly, one of the contributing factors has been we have the sharing economy. So the consumer has these alternatives, these options that didn't exist before. Yeah. And we've seen it in markets that, particularly where we see peak performance nights, and like we're getting ready for the Super Bowl another month here in Atlanta, we will see the supply of shared economy accommodations peak. Owners will put their units onto Airbnb and these other services, making them available for the Super Bowl purely because they know they can rent them at a premium price. Well, part of that, from an economic perspective, is going to be shaved off the peaks that the traditional hotels would have received. But it's not a threat. It's a factor, it's a reality. It's more of an issue in some markets than some. But overall, we think it's something that traditional hoteliers can be learning something from in terms of what the consumer likes, whether it's through the purchasing process all the way through the unit itself. And that overall, and this is not something good for a brief video, but we have a hypothesis that over time we hope to prove or disprove, and that is traditional hotels, regular old hotels, on average will run at a higher occupancy level than they otherwise would have had the sharing economy never evolved in the accommodation space. And that's largely because, again, it's a much more efficient way to meet demands if you can provide the supply when the demand is present. As you know, we all grew up with, you build a hotel and you hope for the next 40 years, 24/7. You know, with 365 days a year, there's going to be someone there to rent these rooms. So we think this is a more efficient way to meet some of these demands that overall, from an occupancy perspective, certainly that the traditional hotels over the long haul will do better than they otherwise would have.
What about the contrarian thought related to that? Thinking about, let's say there is a downturn. Let's say in 2021 we hit some mild recession, and so people are a little more concerned about money. Maybe the traffic for hotels drops, and the people who own these alternative or non-traditional rentals also needs money, and they maybe have the opportunity to drop the rents to wherever they need them to be. We haven't really had a downturn recession, really, have we, since this kind of non-traditional?
No, in fact, you just cited the primary reason why we began to get interested in this 5 years ago, because we fundamentally want to understand it better. But our concern was what you just said, that non-traditional unit owner doesn't have the fixed costs of running their operation that a traditional hotel would. So therefore, from an economic perspective, again, they have the ability to lower their prices much more so than a traditional hotel would. So again, we just have to go through a cycle to see what the data tells us on that. But another factor we do see is, for some people, there is this notion of, we call host fatigue. It's just not worth it for me anymore. I mean, when I could rent it at this level, I was making good money, I was covering my ownership costs, whatever it is I was trying to achieve. But at this level, it's just not worth the hassle. So maybe I'll turn it and try to rent it out for 6 or 12 months. So they can have some of those types of outcomes.
That makes a lot of sense. If I can rent my house for $1,000 a night, okay, but if I had to rent it for $200 a night, no, never mind, right?
Exactly,
All right, where are opportunities? Are there certain hotel types or new supply or areas where there might be some opportunities?
I think if there's a market with a firm in which your firm has a hotel listing, that's the right answer. Ready? Okay, good.
There you go.
No, I think that the generally speaking, a rule of thumb that I've comfortably buy into, look at markets that are making investments in their infrastructure, beginning with airports. And I'm kind of giving you the longer term view of where we go. We think that that's critical. If you look at the population flows and what markets are gaining people, which ones are losing. It's all about labor, and that's an environment that we're going to be in for a long period of time. And so what we're seeing in the markets, like why did Amazon decide to go to the two markets where they're going to? We look at some of the companies, virtually in a lot of coastal, a lot of southern markets and so forth, they're migrating to where the labor is and so forth. And so some of those economic or demographic variables are where I would really begin to look when I was trying to identify, where are likely to be the top markets over the next certainly 3 to 5 years, and if not beyond.
How about property type? Is there any opportunities in boutique hotels or non-branded hotels or anything?
Yes and yes. And I say that, and let me, without going too long on this, if we look at the longer term history of the hotel space, we saw a big change back in the late 40s and early 50s when Kemmons Wilson came up with this idea of let's build a Holiday Inn. And there were many others that basically replicated that concept. History tells us it takes 30 to 35 years for some real fundamental structural changes in the lodging space. Back in the late 70s and early 80s, we had this idea of segmentation. That's when you started these economy suites and all suite hotels, and different property types evolved. Well, here we are now 30, 35 years later. Consumer preferences have evolved in ways to start saying, look, I went from saying, I don't want any surprises. I want to go from point A to point B and have the exact same experience I had in point A when I get to point B. Now it's about, well, I'm in Atlanta, I'm in San Diego, I'm in wherever I am. I want to feel like I'm part of that community, part of that, what's indigenous to this marketplace, and somehow bring that into the hotel. The whole area of technology is driving a lot of this change. I mean, most of us, when we travel, ideally, we say, I want to have at least the level of technology in my hotel room as I have at home. I don't want to miss that, and so forth. So those are some of the things that are driving change in the opportunity. I think another good rule of thumb when thinking about getting into the hotel space in a new development perspective, I'd like to check off two boxes as best I can. One is, what can I build that requires the least square footage to make me competitive in this particular location? And once I've answered that, what type of property can I build that requires the fewest number of employees to operate, understanding I still need to be competitive in that environment. So developers trying to address those two criteria are finding, I can go in the boutique space. I can go independently because I don't have to comply with obviously brand standards and so forth that I might if I went the affiliated route. So those are some of the things that we're seeing on the development side today.
Right. And I guess it depends where you are. If you're in, say, Midtown Atlanta, there's a lot of technology companies and a lot of young, progressive people. Maybe you can get away with a hotel where the guest comes in and never sees an employee, right? They come in, they check in on their phone opens the door, right? And you get away with less people. Final question for you. Immigration, does that have a material impact on the hospitality industry, either for guests or employees?
Yes, and I'm going to answer that kind of from two different perspectives. From, as you just said, from an employment perspective, immigrants to the U.S. have historically, for a very long period of time, represented a prime source of labor for running hotels, restaurants, hospitality-related operations. And I don't think there's much disagreement in our country today that we really don't have a well-conceived working immigration set of policies in place today, and nobody thinks it's going to get fixed anytime soon. So that feeds this whole labor concern over the longer haul. The other aspect of it is from a little different angle is the idea that many of our markets, think Miami, New York, LA, San Francisco, Chicago, are very dependent on inbound international visitation. So there have been concerns about, geez, are we doing things or saying things that make our country less appealing? And the answer thus far doesn't seem to be, because the numbers continue to increase. But we're watching that related issue closely as well.
That's great. And last number that I guess you're tracking this one, the amount of U.S. Hospitality guests that are using non-traditional hotel space. Is that Is there a percentage there, and is that growing or is that stable?
Yeah, that number, and this is from long-term memory now, that number today is, I believe, roughly 7% of all the demand for overnight accommodations. So it's the traditional plus the sharing economy space.
Yeah.
About 7% of that is now coming from the sharing economy space.
And is that growing or is that pretty stable?
It's double what it was 2 years ago.
Wow.
So it's very much, it's growing.
Wow.
But again, I point out that traditional hotels had never been more full than they are.
Right.
So the good news is and I know you'll take this as a trick question, not meant to do, but if you have no customers, what does that do to your business?
Kills it.
But yeah, so good news is the exact opposite is true today. There's more people traveling away from home in need of temporary accommodation than literally we've ever seen.
Yeah. Well, let's hope it keeps going on, Mark. Great information as usual.
Thanks.
Thank you for joining us.
Yeah, thanks for the opportunity.
All right, and thank you for joining us there around the country or around the world. We appreciate you watching or listening to the show. Hey, we'd like to connect with you. We'd like to hear from you. Please connect with us on Facebook, LinkedIn. I think we're on Instagram. I think we're everywhere. So please say hello to us and connect with us, and we appreciate you sharing the show. And until next week, be sure that you always lead, learn, and laugh, and join us for America's Commercial Real Estate Show.